Hey everyone, and welcome to this week's edition of the Swyftx Squawk. I'm Pav, lead market analyst. And this week we're going to take a little bit of time, turn our attention away from the macro, which we've been covering fairly extensively over the last 2 weeks. And let's just talk Bitcoin. There's some interesting trends that we're starting to see form that have had some historical significance. So yeah, we'll make sure we cover that one off for you in depth. We'll also talk about how the dip buyers are currently faring when we look at on-chain data. If you haven't checked the last 2 weeks out, it's definitely worth your time and effort. Go watch a video at least, or check it out on the Swyftx Learn platform, or you can catch it on my YouTube channel as well. But essentially, talking through some themes that are going to remain pretty relevant from a macro front when we're looking at consumer sentiment, as well as inflation, as we head into the end of Q1. So definitely go check that out if you haven't already. But today, we're here to talk about Bitcoin, like I mentioned. We have seen asset prices really just remain steady, if not have a nice little recovery this week. Bitcoin's not faring too badly, up 2% in the last 7 days. But I wanted to take a minute to talk about where we are right now, just when we look back in the recent past or the historical past of Bitcoin as it's been. Now, again, this isn't an indication of we're calling for a bottom, but we have seen a significant amount of downside to the extent that we've now seen 4 straight months since October close red. And if February even closes around where we are currently, that's going to lock in 5 straight red months, which we haven't seen since the 2018-2019 bear market, which is obviously quite a while ago. And even turning to a weekly streak, we're right up there. We're currently sitting at consecutively 6 weeks of downside. And when you look into it, for the year of 2026, we've only seen 1 week of green on Bitcoin, which I think it was up 3% for the week. It's about as bad as it's been, again, since that 2022 period when we look at it on a weekly basis. So I guess what we're trying to understand here is there potentially a side of the market that could be overstacked? Could the bears be getting too comfortable? I thought we'd dive into some data this week to just understand this dynamic a little bit better. Because again, while we're not calling for a bottom, maybe there is some evidence to suggest that the time for the bears is coming to an end. And again, we're talking about time here, not price. We could always go lower in price, but yeah, we're talking about time horizons here. And one way I would look to understand what's happening in the market while we're looking at the streak that we've seen, where we've really put in consecutive red weeks and months, we can also look to see how forward-looking markets like option markets are currently positioned as well. And we have a very simple metric here called the put-call ratio. Now, if you're not sure on what that means, it's essentially how many people are betting for upside versus downsides, puts being the downside, calls being the upside. So when we see a ratio like this move to the upside, it shows us that there is a skew for the market to be defensive. Now, again, option markets tend to be more your sophisticated investors, people trying to hedge their positions rather than just exposure to downside. So it is a very interesting sign that consecutive red months, we're seeing this skew head towards more defensive. So again, if we're just trying to understand if what side of the market could be potentially getting a little bit overcrowded, if we flipped the script and said that we'd had 5 straight months or 5 straight weeks of upside, would we be considering that potentially the bulls have overstayed their welcome? That's what I'm putting forward as a thought, that maybe there's bears potentially getting a little bit too cozy. But just to level this out, again, like we talked about short-term holders, through on-chain data, we're talking people that have held Bitcoin for less than 151 days. This red line here is their cost basis. This basically takes a footprint of when on-chain transactions occur. We have seen a historical trend that it does give a nice little line in the sand of when a lot of these short-term holders go from a regime of potentially being in pain, with price being under that red line, to gain, like we have seen in the past. When that does flip, we tend to see a bit of a trending environment where short-term holders are rewarded for gaining exposure for an asset like Bitcoin. So when we look at a chart like this, it does give some sort of sign that there could be still quite a bit of time left before we see potentially the overall trend flipping. But we do see a significant slowing down of the thrust to the downside when we do find ourselves this far from the short-term holders cost basis when we look at the past as well. But again, as always, past performance isn't always indicative of future performance, but it does help us get an understanding or a bearing of where we might be when we want to compare it to past bear markets. So for me, it's just about understanding what could happen from here on a macro basis that could shift and swing a lot of what the bears and bulls are feeling right now. Like we've talked about, obviously, a lot of geopolitical issues in the market right now, inflation concerns, employment concerns. Any sort of update there, good or bad, is likely going to also bleed into our markets as well. And a way I'd propose to think about the market right now is this is the market doing what it's doing, pricing in what it knows. It's about what it doesn't know right now, that could potentially create some of that relief for the bulls out there, and we see a bit of a pop and a relief rally. Or maybe we see that those continuation moves to the downside. For example, if we do see escalations in concerns over in the Middle East over the weeks to come, I should say, that could be enough of a catalyst for us to continue to see further downside as well. You got to pair this with the good and the bad. But again, it's just understanding conceptually where we are compared to previous bear markets. We can start to see that, yeah, again, we might be seeing crowding on the defensive side of the market. And again, we are hitting historic milestones when we look at consecutive weeks that prices move to the downside right now. So it's pretty interesting time for the crypto market right now. But that's it from me here today at Swyftx. We'll be back again next week. Catch you guys later.